Welcome to another episode of Selling Life and Annuities. I'm Ray Parman, Life Insurance Sales Manager here at Gordon, and I am here with my good friend Paul Bechtold, RVP and Manager of our Debt Elimination Programs. And today, Paul, I know you have something that I think a lot of people often wonder about, and it's always a head scratcher too. It's where to find the money to fund a policy. And can you kind of describe what that looks like as far as the approach with a client, how you bring that up, and how you find the money?
Sure, Ray. And it doesn't apply to me. It applies to your programs too, right?
Yeah.
We got these great ideas, maybe for selling IULs, and that's all great. But we're going to come up with the money. And one of the things we do in the debt analysis arena is we try to tell somebody we want to help you get out of debt without spending any more money than you're already spending. So obviously that takes a little navigating through their finances, and I do that with this simple little one-page financial fact finder. Now, that fact finder does a lot more than just spit some numbers out at us. It tells us a story about what it is the client wants to do and what station of life they're in. So, for example, if I'm meeting with a young 30-some couple and they haven't even had their first child yet, that's a lot different than, say, the 55-year-old who's got a couple kids getting ready to go off to college, which is even different from maybe the person getting ready to enter retirement. Okay.
Oh, yeah.
But if we know how to read that, we know how to see what's going on there, we know what stage of life they're in, and we know how to target certain key things like, debt elimination, retirement, tax reduction, increasing their savings, right? Also giving them more spendable income, maybe if it is that retirement age person.
Are there certain bits of or nuggets of information within that fact finder that you're specifically looking for that's going to kind of help you identify where to kind of move money around?
Well, in terms of finding the money for the debt elimination platform, there's really 4 or 5 pretty simple ones. The first one is any overpayment that they're making, okay? Because that's money they're creating opportunity cost on giving away. I want to trim into minimum payments. I want to take the excess. We want to put that in life insurance.
Okay. Yeah.
The second thing is I ask a question down here about their life insurance. So in many cases, we have clients out there that are maybe buying term insurance. Maybe that term insurance is coming to an end in the next 2-3 years. So that's an automatic savior right there that you're providing to them to help them replace their insurance at the proper time. In many cases, if it's term, I can replace it with permanent and give them more death benefit. So the premium going into that, if they have existing cash value life insurance policies, maybe a juvenile IUL or whole life policy that the parents took out on, maybe it's got $5,000-$6,000 in it.
Yeah.
Wow, a 1035 into our new policy, now structured for more accumulation and death benefit. I can take that money out and put it to work right away.
Yeah.
I call it magic money.
Oh, okay. That's beautiful.
How about the question here about do you expect a tax refund back? Well, most people have a W-2 income, they're getting a tax refund back, right? They could go to their employer, reduce the withholdings, and bring that money home, put it into their policy. Instead of letting the government use it all year long for free at no interest, it could be getting them out of debt, earning them interest, and building their retirement down the road.
Okay.
Right? The last thing is, retirement savings. I can mathematically show somebody that getting rid of that mortgage that has an effective interest rate of 55, 60, 70% on the principal and interest payment.
Gosh, yeah.
Get rid of that first, then save for retirement. You'll mathematically have more down the road.
Yeah. Yeah.
But Ray goes deeper than that, okay? Because there's stories within the story here to be told. So, for example, one of the first questions I ask is, do you intend to send your children and grandchildren to college? Okay. That's a magical question because on the front end of it, I can protect their assets in the life insurance by legally hiding their money, okay, that's not going to count against them when they fill the FAFSA out for college student loans, okay? And then on the back side of that, when the kids come out of college, what are they going to have? Probably student loan debts, right? So we can help them pay those off too. Yeah. Similarly, let's say I get down here to the life insurance question and they say, well, I don't have any life insurance. Well, now we've protected them in that way too. But whether it's the college or the life insurance, even if they don't have a plan in place, okay, that's going to trigger a question for me to say, well, okay, you've got a 10 and 12-year-old and you want to send your kids to college. What would be your commitment to a monthly college savings plan? Because you're going to have one eventually anyway, right?
Yep.
So you just found more premium, right?
Yeah.
Then the last thing is when I get down into their accounts, their checking, their savings, their IRAs, their maybe college 529 plans or HSAs, when I look at all those accounts, you'd be surprised, Ray, how many times I see people with $30, $40, $50,000 sitting in a checking savings account, but yet they're carrying debt up here.
And that money's earning absolutely no interest too, right?
Right. While they're paying gobs of interest out the back end.
Yeah.
So it's just a little bit of education.
Yeah.
A little bit of a basic, 6th grade math training that we give them, and showing them a better path. And usually there's almost no resistance to that once we show them.
Oh, yeah. Well, let me ask you this. On average, when you work with a family and you're going through that process, how much extra money do you usually free up on average? Do you have a number that kind of goes back to that?
My minimum plan is usually $500 a month. That's a small one.
Okay.
And I usually find $1,100, $1,200, $1,300, $1,400 more a month. We have some that are $2,000 a month, especially if they're saving aggressively toward retirement, but yet they see a better way to getting out of debt faster. They'll be able to direct more to the retirement later. They love the idea of kind of push rushing that and getting rid of that debt.
Yeah, that's fantastic. And I just love the concept of saying you can do this and you're not adding on yet another monthly bill that you have to hit. Just by efficiently reorganizing their financial picture can make it happen right there without them having to go get a second job or completely upend their lifestyle.
Yeah, we don't want them, sitting on the lawn chair listening to the ball game on the radio, drink a Blatz beer on the weekend as their form of entertainment, right? But
to each their own.
But, and if you like doing it, that's fine. But we want to change somebody's lifestyle to do this.
Yeah.
We want to get them out of debt, free up their cash flow, and help build liquid wealth that can be used at any time prior to 59 and a half for any reason that they want, no qualifying to get their money. Just put them on a much better path of freedom and autonomy within their finances.
Oh, that's just great. Yeah, it's just that's the beautiful concept of just enabling them to work within their means. So, Paul, if anybody out there tuning into this episode wants to learn more about how to have this kind of conversation with their clients, how would they get a hold of you?
Well, call my cell phone, 317-626-3054. I field calls practically at all hours of the day. Okay.
I would say you're a 24/7 guy. Absolutely.
At paul@gordonmarketing.com. But part of what I want to close with today, Ray, is to say this. There's an art and a science to it. Obviously, the science is in the numbers, right?
Yes.
But there's an art to having a conversation and starting out with somebody's financial goals and letting them put it in their words. That way, their suggestion to you what they want. And just letting this piece of paper tell the story and learning the art of navigating what that information is and what it's telling you.
Yep.
And I promise you, folks, if you'll get a hold of me, and just all you got to do is find a client that has debt, wants to get rid of it, and I can get you started right now.
Yeah, it's such a beautiful thing. I encourage anybody out there. Let's face it, everybody has debt. I don't want to say everybody, but I'd say 90% of Americans out there have some sort of debt that they would give anything to get rid of. And being able to lend somebody a helping hand with something that actually will work and solve that problem sooner than they ever thought possible, just an absolute beautiful opportunity. So, Paul, thank you for sharing. I'm going to go ahead and put a bow on this episode here. Certainly appreciate the insight, but I'm going to call this episode to a close. But before I do, make sure you hit like and subscribe on our YouTube channel. We release a new episode of Selling Life and Annuities every Tuesday at 3 p.m. Don't forget to hit like and share with your colleagues and even your clients there too. We're here to help. So, Paul, I'm going to call this to an end, but for everybody out there, we'll catch you in the next episode. And Paul,
happy selling.